everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that drive the markets currently. So Peter, how have the markets been moving?
Well, we had an interesting day yesterday in the sense that there seemed to be a market sentiment reversal. We had a market sentiment which was more risk-oriented, more positive, and that tended to create some safe haven outflows for the US dollar, which practically weakened against its counterparts. I would like to note that the market seems to have digested the Fed's intentions, and at least for yesterday and during today's Asian and early European session, we had a continuance with riskier assets such as commodity currencies, say for example the loonie, the Aussie, the Kiwi, getting some support here. Overall, I would like to see whether this tendency will be continuing in the coming days or not.
Mm-hmm. And how about the US stock markets?
Actually, it seems that we have US stock markets which have shifted their attention towards the earnings reports. The earnings reports seem to be in the positives, seem to be better than expected. And we have a number of high-profile companies which are to release the earnings reports in this week. So that tended to create also positive momentum within the stock markets. We had all three main indexes, the Dow Jones, Nasdaq, S&P 500, all three of them were in the greens and were still rising in today's Asian session. Once again, should the positive sentiment be maintained, we may see riskier assets, including stocks, getting some support as well.
Mm-hmm. Did we have some statements from UK's new finance minister yesterday?
Yes, we had some statements from Jeremy Hunt, the new finance minister of the UK. Practically, he retracted all the plans which the UK government had about cutting tax rates, etc., etc. And as they were announced practically on the 22nd of September from prior Finance Minister Kwarteng. So that tended to ease the market worth somewhat, especially about UK's debt. And I would dare to say that Jeremy Hunt recognized correctly, in our opinion, that the main audience right now are the markets. And the main effort which was underlying the comments he made was exactly the idea of calming the markets and providing some stability. Overall, there seems to be the case where the finance minister is offering a steady hand to actually guide the UK economy, which at the moment is still at a dire situation. It's not exactly in the positives. And I would expect, though, that also BOE's, I wouldn't say announcement, but there were reports that BOE seems set to extend its buying program of gilts, which may also provide some calm in the markets in the coming days.
Mm-hmm. Also, didn't Japan's finance minister make some comments?
Yes, Mr. Suzuki, by the way, JPY remains weak, and especially against the US dollar. Mm-hmm. It's at a 32-year low. Now, Mr. Suzuki practically stated that movements which are sudden, which are excessive, are one-sided, are not desirable. And that tended to echo the notion of a possible market intervention, a second market intervention from Japan in order to defend the yen. Now, should that be the case, should Japan actually intervene in the markets, we may see the effect being wider than the previous one, as the last market operation of Japan didn't have that awe effect in the markets. It was practically fizzled out within a couple of days. So I would expect the next market intervention to be of a wider scale. At the same time, I would note, though, that the root of the problem, the root of JPY's weakening, lies elsewhere. It's practically due to BOJ's ultra-loose monetary policy. And that doesn't seem about to change anytime soon. So practically, even should Japan intervene in the markets and support JPY, we may see the effects being only for a couple of days or for a temporary period. It's going to be a short-term fix. Overall, we tend to maintain a bearish outlook for JPY, at least until the end of the year.
And what's on the calendar for today?
Well, right about now, we're getting German itself indicators. I didn't have a chance to look what the actual releases were, etc., but the forecasts were for the economic sentiment to become even more pessimistic and the indicator to drop deeper into the negatives. At the same time, also the current conditions indicator is expected to drop also deeper into the negatives, implying practically that both there is a wider degree of pessimism on behalf of the markets. On the other hand, though, it seems that the actual conditions on the ground for the German economy are deteriorating, definitely not a good sign for the euro. I would be noting also from Canada the house starts, the number of house starts. We're talking about the Canadian red hot housing market. The figure is expected to drop and could weaken the CAD, as that would be a result practically also from BOC's monetary policy tightening. And I would be also noting from the US the industrial production growth rate, which is expected to accelerate on a month-to-month basis, could provide some support for the USD. Maybe oil traders may be also interested in the AP weekly crude oil inventories figure. It's due out just before the Asian session starts. Now, in the last reading, we had US inventories rising by 7 million barrels. It's huge. Now, the question is whether that's going to be extended, i.e., we have another substantial increase of inventories, which could weaken oil prices, as that would imply that demand was not able to catch up with production levels and practically the surplus is widening, or whether we are going to see a contraction, which may imply that the US oil market has returned at least partially towards a tighter situation, which could provide some support for oil prices. That should be about it.
Great. Do you have any final comments?
Well, we have the monetary policy as well. We are going to be seeing Isabel Schnabel, that's an ECB board member from Germany. She will be speaking in the American session. By the way, we had also some comments made yesterday by Bundesbank President Nagel, where he stated that the bank should continue to quantitatively tighten the monetary policy and at the same time continue hiking rates. So the pressure is on for ECB to continue tightening its monetary policy at a fast pace. I will be interested to see how Isabel Schnabel will be handling and practically what the tone of her speech will be. I would also be noting from the US Atlanta Fed President Bostic. And during tomorrow's Asian session, we're going to be having Minneapolis Fed President Neil Kashkari, as well as BOJ board member Adachi, which, should he sound dovish enough, we may see further weakening on JPY.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. In front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that we will be presenting charts in the same time frame unless otherwise stated. Now, with no time to waste, let's have a look at the US dollar. Now, we know that there were some bearish tendencies. It's characteristic, this red candlestick here yesterday, which signified exactly the change of trend from a sideways movement between the 113.45 and the 112.10 as it has broken the lower boundary. And even the lower boundary, which now turns into resistance, seems to be showing some resistance against any possible rise of the price. So let's make the necessary corrections. Definitely the S1 is now going to be turned to resistance line. We have to change the color to red. And we have to find a new support line somewhere here. Yep. Could be lower, could be higher. This should be about it. Nice touches here, which tend to show that it was even aimed for here while we had resistance here, 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 here. That's pretty valid. And I'm keeping this. It's the 109 in green, please. Thank you. And that's the 109.05 support level. Let's drill it to 109 how it seems. Nah. No, I'm keeping 109.05. Okay, let's widen the chart, correct the labels. So the bearish tendencies, also note how the RSI indicator below the 4-hour chart is practically, sorry, okay. So you can see how the 4-hour chart is practically below the reading of 50, actually rising a little bit during today's European session, but it's still pretty low. So I would expect the bearish sentiment to continue for the US dollar. Let's make the corrections. The labels, 114.70, 113.45 is now being placed at R2. 112.10 seems to be standing as a resistance line. You can see it by the touches here. Something which would be more evident in the 1-hour chart. So let's drill into the 1-hour chart and see the resistance provided here. Even slightly tested here. Back to the 4-hour chart. First support line now is being placed at the 110.80. I know it's a wide spectrum from the R1, but still we see it valid as it has been able to reverse the downward motion here back to an upward motion. So it seems to be pretty valid as a support line. 110 being the second support line. And the final support line now being placed at 109.05. Overall, we tend to maintain bearish tendencies, and in such a case, we may see the US dollar index dropping, aiming for 110.80, if not even reach it. Mind you that yesterday we had this white candlestick which had a distance, covered a distance of around 118 pips. So I wouldn't be surprised to see the same candlestick aiming, if not even testing, the S1. On the other hand, should the pair stabilize, we may see it stabilizing below the 112.10 or even revolving around its price action around this level. For a bullish outlook, we would require a clear breaking of the 112.10 and the price action to reach, if not even breach, the 113.45. Okay, let's have a look at Euro USD. Euro USD, which has been on the rise, it seems to have stabilized at this level. Okay, we definitely have to make the corrections here. Green. The recent price action gives us new levels, new truths and new peaks, which provide us in turn new levels of support and resistance. So let's make some adjustments. Okay, I'm keeping that one. That would be the parallel level. Definitely there's another one here. Let's make the necessary corrections in the labels once again. Parallel level being the second resistance line. First resistance line now being placed at 0.9870. Proves its worth. Yes, during today's European session, early European session. 0.9770 remains. Let's have a look at this. 0.9665. Okay, I'm keeping it. $0.9540. That's it. So we tend to maintain a bullish outlook, and the main reason why we can see it in a nice upward trend line. Let's draw it. A little bit tight, but still. In which case, should the bulls maintain control, given also that the RSI indicator below the 4-hour chart is currently at 59, which is near the reading of 70. It's more or less at high levels. So there could be some bullish tendencies also in the market sentiment supporting the idea of an upward movement of the pair. Should Euro USD continue to rise, we would expect it to clearly break the 0.9870. I would like to see the next peak being higher than this one. In general, as long as the price action remains above the upward trend line, we remain bullish. On the other hand, should the pair stabilize, we may see it dropping or maintaining practically price action between the 0.9870 and the 0.9770. We're talking about a distance of around 100 pips. While for a bearish outlook, we would require a clear breaking of the downward trend line, signaling practically a change of trend. and also a break, a clear break of the 0.9770, and the next row to be, or at least to market row, somewhere below the S1 clearly. Okay, let's have a look now at cable. Once again, despite the price action being still below the R1 and the S1, the upward movement cannot be neglected. Let's draw it. It's in a make or break position. An interesting pair. An interesting pair because we have two possible outcomes here. On the one hand, there is the possibility that the bulls will continue guiding the pair, in which case we would expect, given that we have one peak, the second peak is higher, the third peak is even higher, that the fourth peak should be around the 1.1495. Definitely higher than this one. And the upward trend line seems to be guiding the pair. So that provides us the ground to maintain a bullish outlook for the pair. On the other hand, though, I would be noting that the pair seems about to test once again the upward trend line we have drawn, which actually was incepted since one. That would be interesting to see. Since the 10th of October, sorry, 12th of October. So should the price action drop a little bit further, break below the upward trend line we have drawn, yet remain between the 1.1350 and the 1.1145, somewhere here, that would be signaling a sideways motion of the pair. Also note the RSI indicator below the 4-hour chart. It's currently at, let me have a look, at the reading of 55, which is pretty close to the reading of 50. It was high, however, it has dropped. And that may also imply some stabilization for the pair, especially should the RSI indicator continue to hover around the reading of 50, implying a rather indecisive market. Nevertheless, should the bulls maintain control, we may see the price action rising, breaking the 1.1350 and aiming for the 1.1495. Now, for a bearish outlook, we would require a clear breaking of the pre-mentioned upward trend line. However, in a bearish outlook, we would also require a clear breaking of the 1.1145, which had a true here, setting the level as a support line. Mind you that it had provided support here as well. So we would expect the price action to break A, the upward trend line, signaling a change of trend. B, and breaking of the S1, 1.1145, signaling possibly an initiation of the downward movement. Anything less, say for example, as we have mentioned before, a breaking of the upward trend line, yet the price action remaining between the 1.1350 and the 1.1145 would be a sideways motion bias. Okay, let's have a look at USD JPY, safe haven currency pair. Okay, USD JPY has moved above the 148.90 resistance line. Let's have a look at the 1-hour chart for more details. So the 148.9 seems to be providing some support here. there is an upward movement. It's interesting how the volatility has increased. I would like to see how that plays out in the half-hour chart, or even lower, the 15-minute chart. 1-minute chart. Okay, this is an impressive movement which occurred just minutes ago as we were speaking. Yep, around 12 o'clock. 113 pips upwards, however the market quickly jumped back higher. That would be a matter of 2 minutes. I don't know if this is a prelude of a market operation by BOJ. Okay, for the time being, drilling back to the 4-hour chart, definitely the R1 now becomes the S1. Let's color this in green. And the S3 becomes the ultimate resistance line at 155. $152.50 becomes the second resistance line. We adjust the chart, and the 150.75 is now the first support line, resistance line. $148.90 now being the first support line. $147. Give me a sec. 147 is the second support line. And the first support line, 145. Now, what I would like to do here is that I would like to add another support line, a fourth one. And the main reason why is because I'm quite worried. The fact is that the price action is very close to the S1. It has not clearly broken it. You can see it practically tantalizing between it. And in the case we have an actual market intervention by BOJ, that's going to be an issue. Now we have one true here, which is also the level at which the upward momentum. Now, should the bulls maintain control, we may see the price action rising and start aiming for the 150.75. We are talking about 185 pips. Okay, it may be difficult, but mind you that we had movements like this one, which were pretty close to that level, covering that distance. Very, very interesting pair. Let's have a look at the other safe haven currency pair. That would be USD-CHF. Okay, USD-CHF, which has corrected lower, possibly also due to a weakness on behalf of the US dollar. But in any case, let's correct this. And I would be placing it at the current level. No, that's too high. But definitely this one. And that would be the 99.65. 99.70. 99.65. I'm keeping 99.65 in red. It's now a resistance line. Okay, and let's go hunting for a new support line. Could be placed here, a little bit higher. It was tested to the upside here and here. Seems pretty valid. I'm keeping that. And that would be the 99 point in green. 96.90. Let's widen the spectrum. The S2 now being placed at 97.65. The S1 at 98.60. The R1 at, let's have a look, 99.65. That should be, yep. Sorry about that. And the R2 at 10050. The R3, let's widen the charts even a little bit more, at 1.012. Let's readjust the labels. Here we go. Now we had a nice downward movement of USD CHF breaking the 0.9965, which was the low boundary of its past sideways movement. It's interesting how the pair practically bounced on the lower Bollinger Band, correcting a little bit higher before descending once again. So the bearish tendencies are insisting in this case. On the other hand, though, we see an RSI indicator which tends to remain pretty close to the reading of 50, which implies that the market may be somewhat undecisive yet. Should the bears maintain control, I wouldn't be surprised to see the price action dropping, testing the 0.9865, which provided resistance here, and given that the price action is above it, has switched its role to a support line. On the other hand, should the stabilization occur, we may see the price action remaining between the spectrum of 0.9965 and 0.9860, or even a little bit higher, closer to the R1, or even marginally, practically hugging the first resistance line, revolving around it. For a bullish scenario, would require clear breaking of the R1 and the testing, if not even a breach of the 10050. Okay, let's have a look at AUD USD, commodity currency pair. AUD USD, which maintained its sideways motion and seems about to test the downward trend line guiding it since the 13th of September. Let's clear up the chart though a little bit. There is a wide correction in the S1. Cancel at 0.6195. Now, the S2 and the S3 were pretty valid. However, they date back 2 years. Here and here. So it's questionable whether they're still relevant. But for the time being, drilling back to the 4-hour chart, readjusting. For the time being, we tend to maintain a bias for a sideways movement of the pair between the 0.6345 resistance line, the R1, and the S1, 0.6195. Note how the RSI indicator below our 4-hour chart is practically at the reading of 50, implying a rather decisive market. And that could be maintained, in which case we may see the price action breaking the downward trend line, yet at the same time respecting the R1 and the S1. Should the bears take over, once again, given the downward trend line, we may see the price action dropping, breaking the S1 61.95 and take a name at the 0.6110. Pretty close actually, only 85 pips apart. For a bullish scenario, despite that not being the case, but given the weakening of the US dollar should not be neglected as a possible scenario, we may see the price action of AUD USD rising, breaking the pre-mentioned downward trend line. Yet for a bullish outlook, we would require also a clear breaking of the R1 0.6345 and the price action to start aiming for the R2 0.6530. Let's have a look at USD CAD. USD CAD also in a sideways motion, some bearish tendencies, however, see how the pair bounced here. So let's widen this a little bit. So we have a new S1 being placed by the market at 1.3660. Yep, come on. Fuck the label as well. So we maintain our bias for a sideways movement of the CAD between the 1.39 and the 1.3660. On the other hand, though, note that there are some bearish tendencies here. Let's have a look at it. 1 hour chart, drilling for more detail. This was the downward motion, has been broken, practically verifying the sideways motion of the pair between the pre-mentioned levels. Also note that, back to the 4 hour chart, note that the RSI indicator is near the reading of 50, also supporting the notion of some stabilization for the pair to be in play here. Should the bears take over, we may see the price action of USD CAD actually dropping, breaking the 1.3660, which provides support here and here, and start aiming for the 1.35, providing support, actually reversing the downward motion, a beautiful V-shape formation of the price action, which is pretty valid. On the other hand, should the bulls be in charge, we may expect the price action of USD CAD rising, breaking the 1.39 and start aiming for the 1.4045. Actually, the breaking of the R1 would be a prerequisite for a bullish scenario to play out here. Okay, let's have a look at gold. We had promised yesterday to see how gold's price is doing. as well as oil. Gold, which has dropped, yet there are some signs of stabilization. But before we comment on anything, let's make the corrections here. Definitely the R1 now becomes the S1 now becomes the R1, given that the price action is below it. It actually provides some resistance during today's European session. Oh, that's nice. We have a new resistance line, a support line already set up. And let's see how valid that is. Okay, it goes 2 years back. Let's see if we can have it on the 4-hour chart. Unfortunately, we can't. We'll have to settle with the daily chart on this touch here. Okay, could set a 5th one here. So, drilling back to the 4-hour chart, we're adjusting the chart, we're adjusting the levels. Let's make the necessary corrections on the labels. R3 now being placed at 1706. Second resistance line being placed at 1685. First resistance line at 1660. First support line at 1635. Second support line at 1615. And the final support line at 1585, which dates back 2 years ago. I have to highlight this point because 2 years back, I'm not so sure that it's as relevant as it was before. Now, we may suggest a widening of the S1 a little bit to the upwards to reach this touch here, also these touches here. That would bring us practically to 1640. It's only $5 a part. For gold's price, that's practically nothing. That's it. Now we have two elements here. The first element is that we have a downward trend line guiding the precious metal since here. On the other hand, though, note that we have a price action which had formed one trough, then a lower trough, then a third lower trough, but the next one is higher. And that tends to imply some stabilization. Also note that the RSI indicator is below the reading of 50, implying some slight bearish sentiment. On the other hand, though, it's pretty close. It's at 43. So I wouldn't be placing my bets exactly on the best just yet. It's going to be a question on what direction the price action may have. For the time being, we maintain a bearish outlook given the downward trend line, and we would expect the price action to break the 1640 and start aiming for 1615, providing support here. On the other hand, should the stabilization occur, we may expect the price action of gold within the next 24 hours to break the downward trend line, yet remain between the 1660 and the 1640, that's a $20 distance here, and respect the two levels. For a bullish outlook, we would require a breaking of the mentioned downward trend line, a breaking of the 1660 resistance line, and the price action to reach the 1685 resistance level. Okay, let's have a look at WTI. WTI, which seems to have a similar drop. Like this one. Definitely this is no longer valid. We're correcting this to a resistance line. Let's go hunting for a new support line. I would be adjusting it here at this true here. And that would be in green, please. The $76 support line. Let's make the necessary adjustments in the chart. So we make a start with the final resistance line being placed at 92.30. Second resistance line being placed at 90. First resistance line being placed at 86.80. First support line being placed at 82.45. Second support line being placed at 79. And final support line being placed at 76. The bearish outlook seems to be still present, indicated also by the RSI indicator, which is currently pretty low. It's at the reading of 36 and pointing downwards. So we would expect the bears to maintain control, in which case we may see the price action of oil's price breaking the 82.45 resistance line and aim for the 79 support level. Should the pair stabilize, the commodities price stabilize, we may see the price action breaking the pre-mentioned downward trend line, yet respecting the R1 86.80 and the S1 82.45. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello and welcome to another video. Today we're going to talk about the London Stock Exchange, also known as LSE. The London Stock Exchange is the primary stock exchange in the UK. It's also the largest stock exchange in Europe and one of the oldest stock exchange in the world. Sometimes it is referred to as one of the big three, along with the New York Stock Exchange and Tokyo Stock Exchange. The dominant index is the Financial Times Stock Exchange 100 Share Index, or FTSE, which is shared index of the 100 companies listed on the London Stock Exchange with the highest market capitalization. London has long been well known as a hub for international trade, banking and insurance. The history of the London Stock Exchange goes as far back as 1698, when broker John Capstein began posting the prices of stocks and commodities at Jonathan's Coffee House. The London Stock Exchange was established in 1801 as London's first regulated exchange, and it is the most international stock exchange with thousands of companies from over 60 countries. In 1986, the UK government deregulated the London stock market. This was known as the Big Bang because of the huge changes that immediately followed. Deregulation replaced open outcry trading and introduced electronic trading to the London Stock Exchange. As this new system was efficient and faster, trading volumes increased. The London Stock Exchange rivals the New York Stock Exchange in terms of market capitalization, trade volume, access to capital, and trade liquidity. The main market of the London Stock Exchange is one of the world's most diverse stock markets, with companies making up 40 different sectors. The biggest UK companies listed on the exchange as of Q2 2022 are Shell, AstraZeneca, HSBC, Diageo, and Unilever. In November 2021, the total market value of all the companies listed in the London Stock Exchange was $4.81 trillion. The exchange is open every day from 8 a.m. to 4:30 p.m. local times except Saturdays, Sundays, and national holidays. Thank you for watching.
Today is a little bit weird. The video is not working, although it really would have been great if we got the video working, but it's not. I'm doing well. Thanks for the video is the video is working, just that our webcam is not working. It's a little bit weird, right? But yeah, thanks for tuning in, guys, right? Nice to see a whole bunch of you guys here. We've been waiting to learn Fibs. That's great. In today's session, we'll be learning about Fibonacci retracements. Nice to see you guys tune in nice and early, right? Bear with me for today's session. Yeah, there's not going to be any webcam because for some reason there is something that is running that is not allowing me to use my webcam. Just let me see. I'm going to just spend. I'm maybe going to spend 1 minute, see if I can figure out what is the funny thing that is running that is not allowing me to use my webcam. Let me see, why is my webcam not running? This is so weird. Yeah, it's so weird. Yeah, the video is not working. Can't be here, right? Can't be here. Okay, looks like it's really not working today. It's quite an interesting case, but no problem. Let's begin today's session, right? Yeah, I've allowed webcam, right? It's I think maybe it's Cass using a voice changer, so she can't. No, it's not Cass, right? In fact, today is gonna be Annabelle. Right, Annabelle will be doing a Fibonacci retracement series, right? You'll be able to see her profile up pretty soon, right? But yeah, you know, it's I know there's a big demand for us to set the webcam up. My goodness, I have no idea, right? The only way that I could get it up is if I restarted the computer, but I don't think you guys would want me to restart the computer, right? It might have a little bit of a delay. Not sure if you guys are fine with that. Yeah, but the only way is if we actually restarted the computer. So let's do today's session without the webinar, without the webcam, okay? All right, now let's begin today's session. Right? Today's session will be I'll be using my handy dandy pen over here. Right, today's session it is the first of 4 sessions on Fibonacci retracements, right? Fibonacci retracements, right? This is a 4-part series. We're going to do retracements, we're going to do extensions, we're going to do expansions, and then we're going to do projections. Okay. The amazing thing about this is that once you complete all 4 of it, right, you'll be able to find very accurate reversals. Reversals is like a contrarian style of trading, meaning that usually, you know, you look for a trade when it hits a key level, you can play the reversal. Okay, so this is one of the hallmarks of Fibonacci. It's a market, it's a leading indicator, right? So we know there are lagging indicators like moving averages, right? Moving averages, even, you know, stochastic RSI, right? Those are lagging indicators, right? Leading indicators actually forecast for you in the future what's going to happen. And even though it's actually Fibonacci, it's a very great way of forecasting this, just that when people are using it, they tend to use it wrongly. It's very, very hard to master it correctly. There are a lot of rules to use it correctly. Which retracements do you use? You know, there are so many retracements to use, you know. Then there's the extensions, expansions, projections, right? How do you draw it correctly, right? All these questions, we'll be answering them today, right? Annabelle will be answering them today. It should be showing you a very, very detailed explanation along with some examples later, okay? Now, as we proceed to today's webinar, a few key things to take note of, right? Disclaimer, guys, disclaimer. Remember, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade, all right? And a few important links that I need to send you guys to, okay? Let me just pull it up over here. IronFX.com, all right. Yeah, it's IronFX.com. Right, so a few important places that I need to point you guys to. Webinars, right? We got webinars, we got past webinars, and we got podcasts. Okay, so in tomorrow's session, it'll be a live trading session. Tomorrow's live trading session will be done by Cassandra, right? Yeah, tomorrow's live trading session will be done by Cassandra. So if you can, not today, yeah, tomorrow live trading session will be done by Cassandra. You can tune in for her session, right? You also watch her use, you also be able to watch her use, what's the word for it? Fibonacci quite extensively there, right? Yep, this is Cassandra. I'll be seeing her tomorrow. For the past webinars, right? In our presentation, you'll notice that when we're doing Fibonacci, we actually combine it with a lot of support and resistance, trend indicators. Last week we covered multi-time frame, right? The previous week we covered advanced moving average strategies, right? If you want, come into the past webinars, click this button here, English, right? And you'll be able to see all the previous webinars that we did. All right, I recommend that, you know, anytime you come across something which you are not too familiar with, right? And or maybe there's a certain term you're not too familiar about, come here, right? And you can watch the previous webinars. Okay. Now, the last thing that I want to let you guys know, we are going to officially launch it in the next, probably the next week. Oh yeah, it's supposed to be launched next week. But for those of you guys who are here, right, you can sign up for it earlier. Head over to vip.ironfx.com. Okay, it's a nice place, right? From next week onwards, they're going to introduce a minimum deposit size of, if I'm not wrong, it's $1,000, right? $1,000 to get access. So if you can, go get your access now, because as of now, it is still free, right? Next week is they're gonna introduce the requirements. I think $20,000, $10,000, right? I think we have it somewhere. IronFX VIP. I'll find the landing page for you guys another time. But yes, come in here, click register. You know, type in your email address. I'm just going to show you guys how to do it, right? So I'm going to do Desmond Ironman, right, or something like that. That's at ironman.com, right? That's Ironman. I will show you how to register for it, right? Come in here, type in your password, register for it, and I'll show you some of the benefits of the VIP room, right? You need to agree to the disclaimers. Once you're done and you join the server, okay, let me show you some of the benefits, all right? You notice, yes, from next week onwards, yes, minimum deposit requirement will be $250,000, $2,000, right? So if you have this, take this as like a heads up to you guys. If you can, go join this week so that you know these requirements will not be kicked in. You will not have to have the minimum deposit requirements next week. All right, but you already have an account that's great. Okay, yeah, be sure to tune in for this. Okay, I'm going to send the link to you guys, vip.ironfx.com/app/register. Okay, this is the link you're going to go to. Now, you will find me, you'll find Cassandra, you're going to find Annabelle, you're going to find Jean, you're going to find all of us in the live trading room. So that's the perfect place to be when you want to practice, especially Fibonacci, support and resistance, you know, your technical analysis, you want trading ideas, you want us to diagnose our trading strategy for you. That is the best place. All right, so go get access to that. Now let's begin today's webinar proper. Okay, I've given you the links, the previous things to watch out for. Right, in today's webinar, right, on Fibonacci Retracements, we're going to touch about a couple of things. right? Of course, we're going to touch about the ideal market structure, right? Sometimes we think that Fibonacci can be used on every single market, right? But there are certain kind of market structures that tend to work better, right? We have this little thing called Fibonacci trend line, which we'll be showing you the examples later, how to know that you are drawing your Fibonacci correctly, okay? Because the amazing thing about Fibonacci is that you can draw it wrongly, right? And a lot of people draw it wrongly, right? If you really want to dig into the roots of Fibonacci, a lot of it comes from Elliott wave, a lot of it comes from harmonics, right? So in today's session, we'll be just showing you the roots of it, right? How to draw it properly. Once you know how to draw it properly, you can actually, if you have an interest in Elliott wave, if you have an interest in harmonics, you can then apply it in those forms of analysis. We'll be looking at different retracement levels. What are the key ones to look at? Is there one that is stronger than the other, right? Which ones do we look out for, right? So we're going to look at different retracement levels later. Go into a live practice session, right? So I'll be showing you, or rather no, Annabelle will be showing you, how we can apply it on the live charts, right? If you have requests, do send them through. If you want us to look at a certain instrument, right? A certain instrument, or I see some questions coming in. I'll reply them in a bit. All right, certain instruments, and we're going to talk about how you can combine different Fibonacci retracements to find high probability levels. Okay, webinar will be recorded. I'm not sure if it'll be sent through the email, right? I'm not sure how soon it'll be uploaded. It might be uploaded 1 or 2 weeks later, right? Yeah, but yes, the webinar will be recorded. And yeah, no, you can't use IronFX in the US. So if you're from the US, right, sit in, enjoy the webinar, but you cannot open an account with IronFX. All right, guys. Now let's see. All right. Without further ado, I'm going to pass on the time to Annabelle. It's the first time, right, doing the webinars for IronFX, right? So lend her your ears, right? I think click on this part here. Yeah, and lend her your ears, right? I'm going to move this part here. Yeah, lend her your ears, right? And what I really encourage you guys to do is ask as many questions as possible, right? We literally have another screen open here, right? Where there's we're monitoring all the questions coming through. Thank you, Irfan. I didn't know you could send a heart emoji, right? When in the chat, but yeah, thanks for sending that through, right? Yeah, but today, and I'll leave you in the good hands of Annabelle. She's really mastered Fibonacci retracements, and she'll be diving she'll be diving deep into explaining how to use Fibonacci retracements. And please hammer her with as many questions as you can, and she'll do her best to answer them. Of course, go easy on her, right? Go easy on her, because you'll be seeing a lot more of her over the next few weeks, a lot more of Cassandra, yeah, or not. Yeah, if you hammer her too much, like, she might not want to come back, right? But yeah, you'll be seeing a lot more of her over the next few weeks, right? And yeah, I'm gonna pass on time to Annabelle.
Hi guys, I'm Annabelle.
Yes, yeah. That's right.
Yes,
guys.
Desmond wants to test me. Okay, so I'll be going forward. I'll be hosting the session. So today we'll be talking more about the Fibonacci retracement. Hi, Irfan. Yeah. Hi. Okay. Okay, so for today's session, I'll be touching on one of the most important technical analysis tool called the Fib retracement. Anyone of the audience know how to use the Fib or has found it efficient? Hi, Joa. Okay, for those who are new, I will try to break it down as simply as possible. Yeah. So why do technical analysis traders use this tool? Fibonacci retracements are popular tools that traders can use to draw your support lines, identify your resistance levels, place stop losses, or even set your target prices. Okay, the ideal market structure. Okay, firstly, you need to know how to draw the Fib as accurately as possible, meaning to say you might need to adjust your time frames for a clearer market structure, like possibly maybe if you're always looking at the 15-minute chart, your market structure might not be as clear as a 1 hour or a H4 time frame. So if the lower time frames are difficult to analyze, maybe you can take a step back to get a clearer view. Okay, what we are looking for is actually significant swings in the market. So these are very significant swings, as you can see here. It's not messy. While as compared to these small insignificant swings, which are very choppy. So these are not very effective in providing an accurate Fib levels, since there are too many swings, too many swing highs, too many swing lows, and it's not efficient. So what we are looking for are these big movements when we create our Fib levels, following the trend line. So I'm assuming that most of you know how to use or draw your trend lines. Give me a minute. I need to pull out I want to pull out the charts. Yeah.
Okay. Just click the Chrome.
Okay.
And then I think it's this one here. Oh, where are the charts?
Sorry, give us a minute while we pull out the charts. Okay. So maybe a quick refresher on how we draw the charts, how we draw a trend line. Okay, so trend lines are drawn like this. Maybe I can give you some examples. This will be the ascending trend line. We usually try to get as many points as possible for the ascending. And then this will be the descending trend line. So what do I mean by following the trend? Okay, so you can see that this Fib, let me just draw the Fib trend line for you guys. No.
Okay.
Okay, let me just pull out the charts. So for a Fibonacci retracement, usually we go from the lowest point to the highest point. So as you can see here, clearly, some technical issues. Yeah, let me just pull out the charts. Okay, so usually when we do when we want to pull out the Fibonacci retracement, we will put our first point, the lowest point, at the end of the week, and then we'll connect it to the top of the trend at the end of the week. So this is the Fibonacci retracement. Usually there are actually a few more pointers, like the 0.38 levels, the 0.618. So there are really a lot of levels that you can use, but we usually use the 0.38 or the 0.618. So how do we actually draw? Dustin, yes, there's a lower point. Maybe I'll get to that later. So here I'm just using this time frame on the 4-hour and this section as an example on how you can draw the Fibonacci retracement. So what is the rule of thumb when you want to draw a Fibonacci retracement? So firstly, your line must be from the lowest to the highest point, number one. Number two, it must connect it must be as close to your prices as possible. So you can't just draw, for example, okay, maybe this is not the okay one. I would connect maybe here. Or even maybe here. Maybe here. This would be a cleaner one. This would be a cleaner. Okay, your prices have to be as close as possible to the trend line. So this is what we meant by the trend line. Or even like this. Okay, this is very clean. As you can see, your prices are still doesn't deviate much from the Fib line, from the Fib trend line. What I mean by deviation is, for example, let's go to a lower time frame. Okay, for example, this might not be that accurate because you can see this is great, but when it comes down to here, your prices are very far away from the trend line. The deviation is too much, so your Fib levels might not be accurate, although the resistance level coincides with your 61.8, but it might not be accurate. So we wouldn't want to draw this line. Okay, so the rule of thumb here is that your trend line must be as close as possible to your prices and do not deviate too much from the price structure. Okay, let me go back to this. Okay. Okay, so Fib levels that works and have been tested over the years are shown on the chart here. So these are the Fib levels. These are all the Fib levels. Technically, it's between 0 to 100%, as you can see here. 0, 23.6, 38.2, 50, 61.8. Okay. There's even 78.6 or 88. So depending on what chart you're actually looking at and how you want to read your information. Hi Kurt, can Fib only be used on an up or down trend? Yes, Fib can only be used on a bottom up or top down retracement. It can't be used on a sideways movement. Is this what you mean by sideways? Okay, so there are a lot of Fib levels. It's depending on how you want to read your charts. So for example, if I go on a 4-hour time frame for the yen, okay, I would draw my retracement level this way. Okay, maybe not. The deviation is slightly too much. Maybe I'll draw my Fib level this way. Yeah, I'll draw my Fib retracement this way. So between 0 to 100, this is a Fibonacci retracement. And you can see that it's going back to test the 50%. So once your Fib level breaks any of these levels, is considered as invalid. So now it's going back, you can remove the 38.2 and the 23.6. So now it's only testing the 50% resistance. Okay, so as you can see from the chart here, like I've mentioned, for Fibonacci retracement, usually the levels are between 0 to 100. But there can also be some retracement that goes beyond the 100% at 127.2 or breaks my 0% to go into the negative, minus 27.2 or minus 61.8. So those Fibonacci retracement levels that goes beyond the 100% is called the Fibonacci extension, while those that go below the 27.2%, negative 27.2%, is called the Fibonacci expansion, which Desmond has mentioned just now. But this will only be covered in our next two sessions. So as you can see here, if you draw a retracement point starting from here downwards, you can see that it goes to the negative. The prices actually breaks your ending point and goes to negative 27.2% to test this level. So technically, all your 0 to 100% Fibonacci retracement levels are invalid now because we have come to the expansion zone. So that's another technique that we will learn. As well as this Fib levels that goes beyond 100%. For example, if you put your point here and then you retrace and it goes beyond your 100% level and it breaks it, your 0 to 100% Fib retracement level wouldn't work. And then now we are going to the extension and test at the 161.8. These are all covered in our next two sessions. So what we have here is usually Fib retracement wouldn't be used as a sole tool to chart your trend lines or your channels or to set target prices for your trades. We usually combine your extension, retracement, expansion, and projection, all these tools together to make your information more accurate so that you can enter a trade or exit your positions. So over the next few webinars, we'll be covering that and how you can combine all together the extension, expansion together with what you have learned today to make it more accurate. So what are some of the common questions that I have seen? Some common questions will be, for example, where to draw your starting or ending point, as Dustin have posted, but there are lower points. Okay, let me address that. Okay. So yes, if we look, let's take a look at our USD JPY daily charts. Yes, there will always be a lower point as you move on, as this is an ascending trend line. So yes, there will always be a lower point. So like I've mentioned before, to make your chart as accurate as possible, the line must be drawn closer to price. So your prices shouldn't deviate too much. For example, okay, this, let's say, for example, this is the lowest point in this daily frame. yes, this is the lowest point, and then this is the highest point, but you can see that maybe this is not a great chart because your prices here deviate quite a bit from my Fib trend line. So this might not be that accurate. What you want to draw is perhaps maybe something closer here to here. I would take this as quite a clean and accurate Fibonacci retracement. So to address the other question, where to draw your starting at any point, usually we will draw your starting point at the end of the week and the end of the Fib level, Fib line at the top of the week. So let's say, okay, take this for example. Give me a sec. Let me remove some of them to make this clearer. Okay, so for example, we usually draw from the end of the week to the top of the week. The reason being, so this is the daily chart, right? If you move back to a 4-hourly chart, it's still very accurate here and here. If you draw, if you zoom back to 1 hour, it's still very clear. Okay. Even if you go to the 30-minute, it's still very clean. It still touches the endpoints. But for example, if I draw let's say at the closing price, okay, this might not be good example. Let me find more obvious ones. If I draw maybe, okay, this one, okay, this is good. This is a good example. Okay, on a daily time frame, let's say if I draw my Fib level here, okay, this is quite a clean line. Yeah, I took the closing price and the closing price. So instead of placing my price at the end of the weeks, I place my points at the closing and the opening price point. Let's see, okay. So you zoom out. Okay, this might be a bit far. Zoom out. Okay, you see your price. The prices might deviate already because you see your prices might deviate from where we originally put, which is here. So that was the daily chart, and this is the 4-hourly chart. If I zoom up further to the 1-hour chart, it will deviate even further. Just give me one sec. Yeah, it will deviate even further. This is what I meant by you should always place your, you see, from here by right, this should be the right way to start your Fib retracement level. This is the point that you should be putting instead of at the closing price. This is how much deviation it has, which is totally unreliable charting already. Okay. So this is to address the question of where to draw your starting at any point. So we usually draw at the end of the week, at the tip. Okay. Okay. Let me see. Jason, over what time period would you look at? Okay, for Fib levels works on most time frames, but in my opinion, I think it works better on higher time frames, meaning above 1 hour. Because the reason being, if let's say you go to your lower time frame, yes, you can draw. I'm pretty sure I can draw a Fib retracement easily. Okay, so the tip to the tip of the wick, Okay, so this is the retracement. For example, or maybe perhaps here. Okay, this is more accurate. Okay, because what you have learned today is that you have to draw your Fib retracement as close as possible through your prices. So you try not to deviate too much like this. Try not to deviate too much like this. So this is too much deviation here. Okay, we try not to do that. Okay, so over what time period? Yes, I will look at the higher time frame because this is a 15-minute chart. Okay, I can draw this trend line, but if I zoom out, it might not be that accurate anymore, and it wouldn't cover as much information as I can get. So usually what I will do is I will go to the higher time frames, like maybe daily. I will try to chart, and then I will zoom out to the 4-hourly or the 1-hourly. 15 minutes, 30 minutes, you can chart them, it will work, but there might be too much noise going on. You see, it might be harder for you to get your market structure right, or your trend lines. It might be a bit choppy, like here, or even your five minutes. See, it's very hard for you to gauge like where is your lowest or where is your highest, and it's very, very choppy. So usually I would do above the 1 hour time frame. Okay, Irfan commented, to make it short, it's like when we see an uptrend. Okay, so let's see. So when we see an uptrend, we draw from the lowest point of the week. Yes, correct. To the top of the week. Okay, yes, correct. Great comment, Irfan. Yes, this is what we do, how we do it. So usually when we chart the Fib levels from the lowest to the highest, or from the highest to the lowest, for example, it's trying to make you understand where is the next resistance or next support that is going to test. Okay, so for example, this is a bit messy, sorry. Okay, I'll do one by one. So from the bottom of the week to the top of the week, this is the ascending trend line. So this will let you know how far it has retraced and which level is going to retrace or test next. So for example, in this case, it might go to the here. So it hasn't broken the 61.8 level. It hasn't broken this 61.8% level. So this price might actually come back here to test, or if it breaks, then it will go to the next level at 0.786 here, 78.6% here. Okay, and then the other example from the top to the bottom. Okay, so descending trend line from the top to the bottom, it retraces, pull back, and then now it's coming back to test here at the support level, 23.6%. So yes, Fib helps you to understand your support and resistance levels so that you can better place your prices, or to take your trade or to exit a trade. Okay, so I have come to the end of my webinar. Thank you all for being so patient, because it's my first session and I'm slightly nervous, but I hope I have answered or addressed all the important or necessary pointers, characteristics of a Fib retracement charting. So all this will be recorded, and you can actually log on to the IronFX page. Let me just pull up. Thank you, Afan and Dustin, very supportive. Okay, so you can actually go to the IronFX page, go to the past webinars. In a couple of minutes or probably tomorrow, it will be under the past webinars where you can actually thanks, Shua, where you can actually rewatch all these webinars if you have missed any or if you want to refresh your memory. Okay, so any more questions from the audience? Okay, thanks, Busani. Thank you. Juha, when will be part 2? Okay, part 2 will be, let me see whether I can find it on the web. So as Desmond has mentioned, tomorrow will be tomorrow should be the live trading session with Cassandra or Desmond. If I remember correctly, the part 2 will be next week. On Tuesday, on Wednesday, I can check and let you guys know again. Ryan, is there an area that has high probability of retracement? Okay, to answer that, high probability of retracement, Ryan, would be, there's no hard and fast rule for this. So to answer that question, I think, in my opinion, to draw a really accurate Fib trend line, Fib retracement, right? So long as there's a trend going on, and then you can find a very clean like this from your bottom of the wick to the top of the wick, a very clean and not so deviated, prices are not so deviated from the line. I think this is considered a good and accurate Fibonacci retracement. So along with this tool, like I've mentioned, there will be others such as the extension, expansion, and projection. Solely this tool might not be a very helpful analysis. You have to use all the 4 tools together to make it as accurately as possible. Yeah, hope I answered that question. Kurt, could you do a live Fib analysis on CAT? Okay, I can try. CAT. Okay, let me see. CATs. Okay, let me see. Okay, what I usually do is I like to go to the daily chart first before I narrow down or go downward into the lower time frames. Okay, overall, it looks like it's on the ascending trend line. It's upward bias, bullish. Okay. Although I can see like maybe a lightly double top. Okay, prices are rejecting here. Okay. Okay, let's go to. Okay, this is slightly choppy and slightly ranging. I wouldn't think a Fib retracement here would be a great choice unless it's paired with your extension, expansion, and projection. Because like the key to drawing a retracement, right, is being very clean, but a clean chart, but here it's too messy for me to draw any. So honestly, I wouldn't chart it here. But if I were to chart it, I will probably chart here to here. This might be quite clean as we are looking for the significant movements before we chart anything. This is quite significant. Prices don't pointer one is we look for significant swing highs and swing lows. Number one. Number two, we are looking before we chart the Fibonacci retracement, we also want this line to be as close to my prices as possible. So if you were to do this, I wouldn't consider it a very clean chart, but this I think is quite clean because your prices don't deviate too much. Okay, so this currently your I would say it's currently testing your 23.6 support level. So if prices come here, for example, it comes here and it breaks this, it will go further to test on your $60. Yeah. Wait, give me a sec. Okay. Yeah, it has broken the 38.2, so I would remove this. So yeah, if it reverses here, if it reverses here, then it will come to test at, okay, 50% might be a bit far. So I will come back to test at the rewatch or re-listen to today's session. You can actually still log on to IronFX under the past webinars later on to rewatch or retune in for a refresher course. Thank you guys. I'll see you guys again next week for part 2 of 4 for the Fibonacci retracement.
everyone, my name is Emily and today we're going to talk about currency pairs. In this video we will look further into how currency pairs work. In the foreign exchange market, currencies are always traded in pairs. This happens because traders, when they purchase or sell one currency and at the same time they can buy or sell another. Choosing which pairs to trade mostly depends on your level of experience. However, the most appropriate time to buy or sell a pair which include a major currency pair and the currency from a developing economy like Mexico. GBP against ZAR or USD against MXN are exotic pairs, for example. Exotics usually have lower liquidity compared to the other two categories, increased volatility and higher trading costs. Being extremely volatile, however, can potentially generate opportunities, but there are always risks involved. If you are well familiar with the market and have some years of experience, exotic pairs are for you. Hope you now have a better understanding of currency pairs. Thank you so much for watching. See you tomorrow. Bye-bye.